Welcome back to Wall Street Confidential. We're discussing why we may be approaching a deflationary environment.
Right.
Prudential is a leading hint to this.
You know, but look, if you insure stuff and it goes down in value, then the insurance companies are in good shape. The storms allow the insurance companies also to raise rates, but that's why one of the reasons Prudential went up. But Prudential's had a remarkable move in a period where commodities go down, and I regard the insurance companies, and have always regarded the insurance companies, as really good, other than hurricane, which makes it a little more difficult, but as really good indicators of deflation versus inflation. And when I see Prudential's strength, what that says to me is do not be fooled by the people who come on TV or write articles saying that the Fed needs to tighten. We are in a deflationary spiral, or else Prudential would be going down. They're insuring things that are not going up in value. A lot of insurance is replacement costs. If you insure in replacement and the price goes down, Prudential's the winner. I don't think people understand that there are certain stocks that are tells, and the bank stocks obviously are signaling that there's lower inflation and a stronger dollar. Prudential did not screw up. They were always conservatively run by Art Ryan. Art's retired. The new guy came in, he's a little less conservative, but Prudential is a bit of a pure play because they don't have the CDO exposure that an AIG has. They're kind of really a play on insurance. And those of us who take the insurance, Chubb should be interesting too here. Chubb would be a little like Pru, another very, very responsible company. But when you see this kind of move in Pru, you shouldn't just say, oh, the earnings must be good. You should say, wow, the backdrop must be deflationary, or else they would the stock couldn't move the way it has.
What other evidence, Jim, are you seeing of deflation?
Well, obviously when we see home prices come down double digits, I still think that home prices are going to be down 25% from the high when I believe we bottom in June 30th. Gasoline's come down. Natural gas is down almost 50% now. That's a huge deflationary. Coal is down very big. We just saw Goldman Sachs downgrading steel. Steel was one of the last commodities to hang in there. Copper is coming down a great deal. Lead and zinc have already been annihilated. What I think you have to recognize is that if you're a consumer, even a consumer as a person or a consumer as a Procter & Gamble, you are seeing an unprecedented level of deflation in costs that were just 2 months ago up really huge. And you can see General Mills this morning, which is Stockholm FractionalsPlus.com, saying, listen, it's going our way. I would urge people to recognize that if homes were in the CPI or the PPI, you would see declines in those indices. The Fed has not understood that. Remember, I've always been saying that the Fed is not clever. And if the Fed saw these numbers, what they'd be saying is, we're going to hold rates steady because we see a lot of deflation. And they have not been able to identify that. Bill Gross, in a very nice note this morning in PIMCO, he said some nice things about me too, which I was thrilled, but talks about the deflationary nature of the deleveraging in America. We also see that there's a lot of cash piling up because a lot of people are unwinding trades. Whenever you see this, it's deflationary, and it's important to recognize that if you were betting on inflation with, say, steel, which is one of the big commodities that's gone up a lot, that's over. They're cutting prices, and they will keep cutting prices. That's what happens after you've raised rates substantially like they have in Europe, and after you've seen a big cool down in an economy like China.
All right, that's a lesson for you on
Yep.
deflation. Almost as bad of a word as recession. Like, we don't want to say
I like
it.
deflation because what it does is give you a value for the financials, and a commodity rally is always going to have a terrible end because you get a situation where there is I hate the phrase demand destruction because it's just so cliched, but you get a phase where they tighten rates and the inventories build and the price cuts. Deflation, on the other hand, allows for a tremendous amount of pressure to be off central banks. I wish the central banks would look at the 10-year, which is signaling radical deflation. That's a much truer indicator than what the Fed is saying. They need to cut rates if you looked at the 10-year. Again, no one is saying that. Europe needs to cut rates badly in order to stop the deflation.
Okay, that's deflation on Wall Street Confidential. Thank you to Jim Cramer. Stay tuned.